What up, guys? I'm here today. I will teach you about the higher time frame PD arrays, prime and discount, macros, etc. etc. Okay, so first thing, my channel here, I record this video here. It's in Portuguese and I will do a version in English. Okay, so let's go. Let me put this first. In the last Friday, I saw a price action like this. When I opened my charts, the first thing I saw was this. So I see this swing low, swing high, price going up. This is a Judas swing because we won't going higher, but we are reaching for buy side liquidity and prime because we are above the midnight opening. Okay, so we have the low and the high. This high here was in prime because above the midnight opening. This is a 5-minute chart, so what I will do? I will do something like this just to get the 50% level. As you can see here, this is the equilibrium. Look, so what I have in prime above this level, I have this inversion for value gap. This little bit here, but I won't use that. I'll use this one. So this one is good. 5-minute chart. You can do this. As you can see, price touched that level, 50% level of the inversion for value gap and going down. This is also this here, high, low, high, high, breaks down. This is a break, but not so good because it's below the equilibrium level. I would like to use the inversion for value gap. So what I'm looking here, higher time frame, 15 minutes. What do we have? Those relativity lows, right? So this is my sell side liquidity. I would like to see price reaching for those levels, okay? That one, this one here. Okay, and let's go to, because what we have here, we have this fair value gap right here, but I would like to see if the higher time frame is better, 1 hour, if this is better than 15 minutes. So let's look, yeah, right there, a huge fair value gap as you can see here. So I mark out this fair value gap, extend to the right there, like this, as you can see here. So now we have our liquidity and 50% level consequent encroachment of the fair value gap. Okay, 1 hour chart, 15 minutes again, and you look for price action. Price going up, takes buy side liquidity reaching down, sell side, and comes back again. Now what do we do? 5-minute chart. I will do this. I put the 90-minute cycles, 6 a.m., 7:30. Always New York time. Always. So 6 a.m., 7:30. As you can see here, 7:30 is right there. I have the opening, quarter 2 opening, cycle opening right there. Now what do? We wait for price accumulates, like you can see here, and going up to reach the higher time frame PD array. In this case, a PD array that was in prime, not discount, in prime. Why? Because of this. Look, equilibrium is the low of that inversion for value gap. So I would like to see price reaching for this level here, and after that going down. Okay, so we wait. Look how price respects the true opening right here, 7:30. But let me wait, let me adjust here, right there. Now it's right, as you can see. But we wait because liquidity and a PD array in prime. Okay, look, now we go to 1-minute time frame. Look what we have here, a macro 850 to 910. So what I would like here, what we were expecting here, we will wait and expect a displacement or another PD array right here showing that we will going down. I would like to see lower prices, right? Because we have those sell side liquidity. 50% level. Let me adjust this liquidity right here. Look, those sell sides and that 50% level. Okay. So look, accumulation, manipulation. Now we are above the 830 opening, above the true opening right here, 730, and we reach for a higher time frame PDRA. So what we'll do right now, we will wait for a displacement lower. Okay, so look at this. Consequent encroachment. We'll wait, just wait. Right there, look at this. Now we have the inversion fair value gap lower, this level, 50% level, and higher. Higher, lower, and midpoint, 50% level. So we have this breaker here, a little bit. This one is a breaker. What do you see here? Open, high, low, close. You can sell here. You can sell here. And we also have this breaker, swing high, swing low, high, low, higher, high. When breaks down, comes back. What do we expect? We expect this. Bang. This is something we are looking for. You can sell here, and I actually did this trade. I'll show you after that. So you can sell here and here, okay? This is what we are looking for. So look at this. Look, open, high, low, close again with the wicks. Open, high, low, close. And as you can see right there, you can sell there. Bang. So this is the 930. And price reach for the liquidities that I showed you on the higher time frame. As you can see. And price almost reached for the 50% level of that fair value gap, 1 hour fair value gap, but we are in S100 CFD. We're not using the contract NQ, so this is acceptable. You can expect those imperfections in price. So if you sell here and here, you get out everything here or here. You don't wait for price comes back and get you out. And I did this trade. Like I said, not here, here. Are you seeing this? I'll show you. This, right there. Look, right there, right there. Okay, the break in here. Look. Oh, sorry. Right there. Price open, high, low, close. Next candle I sell a little bit late, but I sell here. Okay, so here when price goes below this low, I took a partial, as you can see there. I took a partial there because it's right there, as you can see right here. Why I did that? Because when you have like, how can I say that? If you sell here and you have space between here and there, look, for example, show you this. Look at this. It's 2R trade, 2R arrow, like people say, risk reward ratio, 2R. So it's good for me to take a partial here because it's 2R. I took a partial, but at the break even, and I hold until here or here, you know. And now here or here I close everything. But why I took partial here? Do you know why? Because it's before 930. Before 930. Because when 930 open, you could see a sweep like this, open, high, and low. And I don't want to see that. I won't look for that. I don't like that movement. If 930 open, sweeps high and go lower, I wouldn't like that. So because of that, I took a partial here, as you can see, and I hold until there. Look, I closed the trade right there, and price reverses, and after that keeps going down. So buy side, buy side, and buy side right here. Partial here, first partial before the 930, and close everything there, as you can see at the liquidity. Okay, first liquidity pool. All right. Sometimes this is the I don't like to show my trades, but as you can see there, I did took this trade. And in this trade here, as you can see, accumulation, manipulation, and we are above the 830, above 730, and we reach for a higher time frame pre-D array inside a macro. And this is quarter 2, quarter 1, quarter 2, and quarter 3. We will displace lower to reach for sell side liquidity. And if you want more things, you can do this, like that, and this one right here. -4, look at that, and price reached for that level. -2, 2.5, silver bullet zone, you know. All right. And we have more things here. Let me show you. Right there. Okay. I was expecting why I close everything here. As you saw. Why I close everything here. I was expecting this movement. I was predicting this movement. I would like to see in this day this movement going higher again, and after that going lower. Why? How do I know that? Experience. It's time looking at the charts. It's showing up every day. I look for these things every fucking day. Always in those times, 9 a.m. to 10:30. So I always watch the price action from like I said, 8 a.m. until 10:30, 9 a.m. to 10:30 until 11. Okay, so I always looking price action like this every day. I know what price will do. I know experience. With the time, you get there. You will get there. But how do I know? I have things to know that. Look, 9:30 open here, as you can see. Right, as you can see, 9:30 open here, right? And what we have above 9:30, we have 8:30, 7:30, and we have midnight. So midnight opening is here, 7:30, 8:30, 9:30. So 9:30 a.m. open in discount. Openings in discount. Because why discount? Because we are below the 8:30, below the 7:30, and below the midnight opening. So when 9:30 do, when 9:30 do a movement like this, open and fast, a movement fast, reaching for sell side liquidity, we are in a discount. If you're looking, if you're understanding what I'm saying, when 9:30 open fast going down, reaching for sell side liquidity, what I will expect? I will expect price retrace, going higher to prime, and after that going lower. If we have more sell side liquidity below, and we had more sell side liquidity below. So it's a lot of things happening in the chart for the charts do this movement. Reach for here and going back up. What do we have here? Sell side liquidity, 1 hour fair value gap, and 50% level of that fair value gap, and we are in a discount. 9:30, 8:30, 7:30, midnight, we are in a discount. 9:30 opening in a discount range. Price reaches for sell side, higher time frame pre-D array, comes back again, taking buy side liquidity, and reaching a prime level and a higher time frame PD array, respects the 50% level with the wicks, and going down, as you can see. So you can sell here because we are in a higher time frame PD array, we are in prime, and you are in prime for 8:30 and 7:30. You can sell here and bang. Why I didn't took that trade? Because it's my rules. If I get this one here, I don't have to risk again and get that one. Okay, it's one trade for day. If you take profit, if you hit the profit, you don't trade again. We are not gamblers, guys. You don't need to be greedy and trade again. Okay, so let's keep going. Look at this. Like I said, and we have this level here. Like I said, 50% level. It's 50% level is here, right? As you can see here, and we go to 5 minutes. Oh, 1 minute chart. Sorry, my mistake. Look, 9:30, 8:30, 7:30, 50% level of that range, higher time frame pre-D array. Everything below here, everything here is prime, and everything here is discount. Or better, everything above here, above this level, is really in prime, expensive. So price will going from expensive to low, you know, expensive to cheapest. Something higher time frame, prime, and discount. 50% level of that range. Okay, so let's keep going. Here we have another macro. As you can see, 950 to 1010, and we have this sell here. You can sell here if you want, because we are above the 930, above the 830. You can sell here. We have a balanced price range right here, and you can sell there to reach for that 50% level and those sell side liquidity. Okay, that's it. And we can do something like this. For example, there's a lot of possibilities, and if you don't know those possibilities in the price, you won't be good, you won't succeed. So for example, 930 open here, right? If 930 is open here, instead of here, it opens here, it will be in prime. And if you sell here, you could hold that trade until sell side liquidity. You don't need to be afraid of this movement higher, this Judas swing right here, because we are in prime. We will be above the 830 opening. In here is better above the 730. Here is better above the 50% of the range, and here better prime inside that higher time frame PD array, above the 50% level. And here is the best X scenario if 930 open there, because we would like to see this 930 Judas swing higher. 930 opens here higher, comes back down, use this like 50% level and going down like a support, you know, resistance, whatever. We don't trade that, we trade liquidity. But 930 opening reaches higher. 930 opening here, for example, here in a higher time frame, above the higher time frame PD array, above the midnight opening. This is movement higher. It's a Judas swing above the midnight, comes back down fast, displacement, and we have breaker, and we have this inversion for value gap, 50% level. You can sell here, and now you could hold that trade until there. You don't need to be afraid for another movement higher, because we open 930 in a prime, really prime, above the midnight opening. That's the best X scenario you can see. But this didn't happen. None of these scenarios that I said happened. What happened is what you are seeing here. So you need to work with what are you seeing in the charts. 930 open here, and if you sell here or here, you need to be careful when reach for this sell side liquidity. You can close it. You can close everything. because you can expect a movement higher again, and after that, if you want, you can sell again there and there. Okay, so that's it. I think I showed you everything about this trade. So God bless you guys.